The dark truth for Ether as a team, I would say, is not actually looking really good. At least people are starting to understand what's happening, or those who are inside the industry do understand that. Right now, you see Ether merge is completed and moved to POS, and you expect that to be more efficient in terms of the scalability, the speed of the transaction, the fees which you pay for the transaction. I personally tested that today and I'm like, shit, this does not actually look really good, right? And then I saw this today. Ethereum Classic's hash rate is going up. Why would you think that's happening? There is reason based on the practicality. Now, when you look at this and say, okay, they worked 7 years to do this and they've completed it now, you would expect something really great other than just saying, okay, the energy consumption is dropped. Everything else remains the same. As a user, would you prefer that? Or as a user, would you prefer more efficiency? Now, if that was really great for the network, we would have seen some kind of movement in the price, but we don't see that. And if you look at 2021, this is the picture of where the developer activity is moving. And in this one, you can see Ether was at the top, but right now, you won't see that. It's slowly going down. The market went down, agreed, but you won't see the same structure. This is one of the main reasons why ETC hash rate went up. Now, we will explain as we go further. So if you are here in the cryptocurrency market and you're watching this to gain more value, please do consider hitting that like and subscribe button if you haven't done that already. This is the scientific investor family, where the retail guys, the normal common human beings, learn how to become the next top 10%. Now, going back to what we were talking about, you need to see the reality. This is the exchange inflows, and this is what is being held on exchanges. So I'm like, okay, what really is happening here? Are the miners going to stake all the rewards, or they have already dumped it and they're moving that mining system into somewhere else? When you go look at things like this, it really feels like that. Now, understand this is just one day, and Ether Classic has higher hash rate. People are going in there, they are doing the mining. They think that's much better to do that on the proof of work there. So the proof of work blockchain, Ether Classic, has recorded a large spike. Why? The miners, they need to move. Now, practicality here is like the tools which you use in Ether Classic is same as this one. And one of the interesting factors, like, they used to actually get a lot from Ether, the minings, right? And right now it's moved towards staking. So now proof of stake Ethereum, right? So practically all these miners, they're actually going into some way where it's actually compatible to use their existing equipment to produce value, because they are already invested in that. It's their money. So you can't go out and say, okay, you shouldn't be doing this. This is energy consumption. Agreed. But they invested their money and they would expect a return from that, right? So that's one thing. Now going into the merge, if you are that one normal guy, now I personally checked this one out and I'm like, okay, this is on the Ether. One of the best stuff which they have developed is the MetaMask, which people use generally. And there were times when I used to pay like 0.5 or $1.5 as gas fees for the same strong block nodes fees, right? And here I noticed like it's taking more time. It's showing the network is busy, even though I tried like 4 or 5 different times in every 1 minute to see like how it's improving. It's not improving. Then you look at the fees, it's close to $3. So it's not 0.5, it's 3. For me, that does not make sense for paying that $3 for just $11. That's, you can't say that's an efficient network. And that's why today we are looking at this. Because we do understand people are going to move out. Now, Xrpl Ledger is the best one, but the reality of that is we don't have clarity. So developers as investors and developers, they don't really have that appetite if you are in US to move into this ecosystem. That's why you see people building on other stuff. So when this con activity is happening there in Ether, that's going to give you a lot of big details. So right now, when you look at this, I'm like, is this actually what you really wanted? More centralization? Because if I'm looking at this, I would say like, okay, you're welcome to all these profiles. You can go into that base and develop there. Why would you be here where it's like, two addresses controlling 46%? That for me does not actually look like a decentralized network. And that's why when I actually go back to actually look at things like this, one, the transaction speed, then the transaction cost. You name what you really want to look at when you are in this industry. If it's the decentralization or whatever, you have that here. But the difference here is that the team here has a lot of political activity. The investors, they have a lot of political connections. We know what they're really doing. So in the background, if you are here and you do understand like, okay, Ether merge happened, what can you expect? Now, it's not just one article which I've read through. I've personally read this one, and actually went in to the market to test myself to see. I moved some of my Ether a little bit to actually see how much it actually cost me when I move over. Fine. And it's still higher compared to other networks. And time taken is comparatively higher than if you do it using Solana, Tron, etc. So I'm like, okay, that's not improving much. There is nothing big. Now, will the merge speed up the transaction? Personally, I didn't feel anything. And coming here again, some users might find this disappointing. I find this a ton load of disappointment because you spend 7 years to do this stuff and you come out saying, okay, this is what we have come up with. And it's a lot more same. But, we get to make a lot of gas fees. It's cool. It's great. Just in front of the regulators, we can now say like, we don't consume that much energy. We consume only a little bit of energy, right? So that's one narrative. You can actually see like what's shown here. Like if they want to actually compete with Visa, with XRP and that level, they need to actually reduce it. So from here, as they move to proof of stake, they reduce 99.9%. That's what at least they say. That definitely mean like, okay, they reduce the energy consumption. But as a blockchain network, which is built for developers to come in and develop, is that the only thing which you will consider if you are moving in to develop something there? I personally don't think so. So when you are here and you understand like, okay, it is not making it faster. At least as of now, you look at the difficulty rate and time taken for each blocks to come out. It used to be like 13-14 seconds before, and I think right now it's like 12 seconds. So it's not much of an improvement if you are looking in terms of time. Great, you understand that. Then what about the fees? That's another big no. Ethereum's notorious gas fees are unlikely to fall straight after the merge completes. It won't be until Ethereum 2.0 implements blockchain sharing that users see a reduction in on-chain gas fees. So it's like, okay, you took already 7 years and now you come out say the big thing, the bombardment of merge is here. But, you need 32 Ether to stake and become a validator there. Fine. And you see like just 2 wallet address control around 50% of the existing stuff. So even if you go there with 32 Ether and become a validator, how much of the power should you think you will have, right? So I'm like, okay, if that's the case, majority of the staking rewards are going to that side. They can dump anytime at the market. There is no transparency. So for me, that is next generation con, which is happening in front of the regulator, and SEC is kind of, closing their eyes. And then I see this particular article and I'm like, you pay $60,000 in fees to mint an NFT. And you want to see the NFT? Okay. Yeah, that's perfect, right? It's a great art where you really pay 36 Ether in this economical situation, right? So I'm like, okay, that's really great network. Now, whatever I'm saying here is completely my opinion and my thought process and my experience after using that network in one way or the other, whether I'm using it for a transaction from my exchange to outside wallet, or I'm using MetaMask to, go through a node project, they paying their fee, taking the rewards. I'm like, okay, if you right now stronger is like $2.50. And if you're going there to claim that, imagine you're going to claim $10 of your rewards. You're going to pay $5, $6 in fees. I'm like, that's nuts. That's not how a blockchain technology should be working, because it is meant to create efficiency compared to the real existing status quo. And that's not what's happening. You are only showing that the energy efficiency is reducing. Fine. Now we come on to the price. Look at like the short term. You are at a short term support 1 and short term support 2. Great. You follow up that on the RSI and you get the same. Okay, you are close to that support. So I'm like, if that bounce, it's more or less a move with the market. The entire market moves. But right now, even compared to the Bitcoin, you can actually see like, okay, Ether is dropping hard, right? Why is that? You see other projects where it is practically easier to move on, they are moving there. And then you come here and look at like, okay, in the exchange, it's only this one, daily flows 2.5 million Ether. I don't think that's a really good narrative out there. Fiat exchanges, it is down from yesterday. So that means people were selling it more yesterday. And you see like 50,000 Ether already moving into fiat exchanges to get out. And others who are here in the market with the supply, you're seeing like, okay, the liquid is now 51.77 million. So now my question is, how many of these guys are going to dump? We really don't know, because the Ether held for less than 1 year 60 million and 50 of them is liquid right now. So when I'm looking at this, I'm like, okay, you can say all that, but when you come into the change and look at the narrative here, now this is what's happening. A lot of people are increasing here on a short-term duration, and they look at the market, they understand how things are moving. See, this is Ether to Bitcoin, and you see weight being to the downside, meaning the price is getting more pushed towards the downside. You go on a daily chart, you look at this like, okay, you made a higher high here, but you're actually making a lower high in terms of a bearish divergence. So that does not actually look good. Now you go look at XRP Ether, and when I'm looking at XRP Ether, what I personally observe here is that yes, you're breaking to the upside, and this is the day of the merge, right? People are expecting something enormously great for Ether, and you see like, okay, even one of the slowest asset because of the SEC, you don't have a lot of big exchanges where XRP is traded in US precisely, right? And still the price is holding compared to Ether, which has to be, one of the good asset with all these hype, but it is not performing up to that level. Now, then you go zooming a little bit out, seeing like where you are right now, you're getting that congested at the bottom where your RSI is trending higher, the bottom, it's a rising support and the price is staying here. So we don't know when it's going to break out, but technically speaking, you are going to break out higher. Yeah, and once you do that, I think this is going to be one of the biggest stuff where a lot of money is going to move out of Ether. And I'm not saying everything is actually going to come in to XRP, because right now you don't actually have the clarity and you see like different projects getting attention. And in early 2022, when you are looking through this, you actually see like, okay, you have Cosmos, which is Atom, you have Nia, then Polygon, which is Matic, Solana, all of these are getting much better attention. And when you look at year-over-year change, Polkadot is actually skyrocketing. It's actually blowing through. A lot of new developers are actually moving into that system. That's, literally you go develop this, try something and you feel, okay, that's much efficient. Then you really move on there. Why would you spend your time and energy and effort and money on a network which is going to actually give a negative experience to your customers, right? You want to build on something where your customer experience is much better. You want to improve that, right? And right now, here you are. You actually see Algorand, you see Avalanche, you see Cielo. You have a lot of different other stuff, including Filecoin, where the developer attention is actually increasing. So now if you are in this one and you are looking at what's happening on a monthly basis, on a full-time monthly developers, how it is increasing, I'm like, Terra Luna, it's increasing. And this is old document, right? And I'm like, okay, they are comparing 1 year, and now this 300% here is running out. Then at Solana, they had multiple network shutdowns or issues, and people are now literally moving out. What else will you do? So all of these are going away. They'll go into this range where they can rely on. So Nia, Phantom, Wax, Matic, you name these coins, they are going to get more attention, because as a lot of developers and money come into the Web3 world, you're going to see more and more developer momentum, and they won't just go into a project which say like, okay, you are going to get much more of energy efficiency. Literally, for me, that does not actually feel like that's the great narrative where you are going to be a developer. If I'm a software guy and I'm going to develop something, I wouldn't actually choose that. But again, it is just my opinion in the market. Now you go into the market, you're looking at all this and you're saying like, okay, there are coins which are slowly grinding higher. There are coins which are getting a little bit more volume than they used to. They are slowly grinding higher. So in general, the market is still bad. It's not that bullish, that kind of stuff. You go look at Bitcoin for the time being to actually see like what Bitcoin is showing you. Right now, you have tried to break through, but it was not successful. The price is still below the 20-day moving, 200-day moving average on a weekly. So we really wanted a breakout here. We did not get that. And if you are looking at a lot of different assets, it's either wait or no, don't buy now, right? And only a few where like it's okay to buy this. And we did one last week looking like 20-25 assets, and we saw them. And right now when you go into the market, they are in green. Either they are holding up much better than others, or they are moving a little bit higher. Some of these are there. And today we did another weekly where we did like 25, 28 assets. And again, some of those are still here trending higher. So in the market, that's really the opportunity. If you are looking to take benefit of the upcoming opportunity in the market, you want to see like, okay, I'm going to put more money in, and I want to make sure I'm putting that money in an area where it is trending higher rather than averaging down, because on my long-term bags, I've already averaged down. The current price is above my average. There is nothing to average down. Then you want assets which are trending higher. You want to make sure using multiple indicators and parameters inside investing to see that is happening, right? And here for Bitcoin, when you are entering here, you can actually say like, okay, things are actually changing one by one. On a short term, you are slowly grinding up, but what you want to see is another bounce from this trend line support. Whether that will do it or not, we don't know. But even that means Bitcoin can actually come back and test this level, 18,000. Now, yes, we have done that before, so close to 18, just below 18. So that may not be a new low, which can be possibly a double bottom. Now, we don't know whether that's the scenario, but as of now, the RSI is testing the resistance to break through. We have not got that level yet, but the price is about to break higher, because if you actually get the double bottom which we talked about, we are showing a possibility. Now, yes, with the CPI, we got hit hard because the dollar was actually trending, right? So now when you actually go in and look at the dollar index to actually see like, okay, will we get more space or room to the upside to move higher in terms of dollar? Right now, you're here. Your RSI is still there. It is not trending higher. At least on my eyes, I would say this is still trending lower. Yes, you did not actually put a lower low, but you're putting in consistent lower highs. So if you get rejected there, I'm like, okay, yes, there is a lot of Asian currencies, especially getting smoked. Even, developed advanced Western, some of the currencies are getting smoked. But here, if dollar is going to retest this level, that's going to be hard for us in crypto. But what we would like to see is a continuity of this. What do I mean by that? Clear all this. For me personally, I'm looking at this as one high. That's your first high. I'm looking at this as your next low. So you did not get a higher high, you got a lower high. And then you put in another low, which you can argue that it's not a lower low, but like a double bottom kind of stuff. But you are making a lower high. And you actually broke below the 20-day moving average and got a bounce. Great. So what we are looking at right now is, yes, the price may actually drop, but it may not be a huge drop. You would come towards this support. Even at that time, you may see a relief rally in the crypto market and across the stock markets, because you have actually seen recently, like, prices are really volatile. It moves up. It actually broke below the moving average, came back to retest it, and then got rejected with the CPI. Now, the next one, the Fed is going to come out. It's just 6 more days, and we'll have to see what they really do, because if they're going to hammer the market, you really are going to observe a lot more volatility. And a lot of big guys are going to actually take benefit of this. But keep in mind, if you are there observing some of these small micro cap projects developing through this bad times, hard times, if you are in there, hold on tight, because they are going to do well, in my opinion. Now, then I come here and I see this and I'm like, okay, that's a really great news. So it's not only the 70,000 XRP investors who are moving in, it's also different organizations who have reputation, right? So SEC, I personally don't think there is any reputation. And then you go through looking at big guys in the industry, where BlackRock, Fidelity, KKR, all of these guys are here. And they think this bear market is different, not in terms of the price fluctuation, but in terms of the developer activity. So they are seeing real world adoption. You see this? So utility is the key. And if you are in assets which have great utility, hold on strong. If it's meme coins, who knows? So guys, if you receive value for your time, please do hit that like and subscribe button. And if you want updates on different assets inside this volatile market, please look at the Patreon. The link is given in the description below. So guys, that's it for today. I'll meet you on the next video. Bye-bye.